सो हेलो एवरीवन, वेलकम टू दी प्लेटफॉर्म अगेन। और हम लोग चले सबसे पहले अपने डिस्कशन पॉइंट की ओर। बट डिस्कस करने से पहले एक बार क्लियर करना चाहेंगे, आप लोग को आवाज़ क्लियर आ रही है और स्क्रीन प्रॉपरली विजिबल है? इफ इट्स सो, काइंडली प्रेस 40 इन द चैट बॉक्स so that we can continue our session from here only. So gold finally breaks free amidst S&P insanity. Gold being stuck in a maniacal short trend. Trading gains and losses, the average number of trading days. Gold's MACD finishing week weekly gold bars and parabolic trend. Gold hits 2 month peak on dollar retreat. So gold being stuck in a maniacal short trend. Gold after 18 weeks of being stuck in a maniacal short trend without price rally going anywhere. Finally broke the bonds of M-word crowd by flipping too long, but not without a midweek scare. More later on the affair. But we begin by assessing the stark insanity besting the parabolic performance of S&P 500 plus 25% year to date. It settled yesterday at 4698, a record closing high for the seventh consecutive session. Such phenomenon has occurred but five other times in the past 41 years. The parabolic performance of the S&P, so across all those years from 1980 to date, what is the longest stretch of time between all the time highs of S&P 500? So each 8 months, just over 3 years, slide then less than 6 years, all of above. So if answered E, you are correct. Just a second, hold on. Sorry, I am discussing the last session's topic, and finally I'm moving towards just a while. So, gold's MT4 terminal, तो देख सकते हैं MT4 terminal पे 1859 के प्राइजेस चलते हुए आ जाते डिस्कस पॉइंट पे तो इन्फ्लेशन प्राइवेट इन्वेस्टिंग इज स्टिल कोल्ड ऑन गोल्ड so points to be discussed today: surging stock market, dull gold's investing shine, the gold investor index, Gold buyers continuing to beat the number of sellers. Gold signals and technical analysis. Gold signals and technical chart. Gold basic and technical chart and gold price. So surging stock market dull gold's investing shine. Fall 2021 surging inflation rates continue to leave investors gold on cold. With sentiment towards the precious metal falling to its weakest level since mid 2019, writes Adrian Ash at Bullion Vault. By weight, in contrast, gold investing demand rallied sharply last month from September's net selling, the first liquidation of gold by users of a market leading e commerce platform for trading physical gold since the eve of the COVID crisis. But the surging cost of living has failed so far to ignore stock market to invest in gold and price are equally flat. So that's because major central banks are following emerging markets in tightening monetary policy, creating a headwind for non-yielding gold even though interest rates remain far below the pace of inflation. With US inflation now running at 3 decades highs, more than reversing the pandemic's commodity price crash, the Federal Reserve is expected to start reining back its meeting, tapering new QE money creation from the current dollar 120 billion per month. The US dollar saw gold average its lowest price, so the resulting strength in the US dollar saw gold average its lowest price in 4 months in October, just below 1777 per ounce, while prices for both euro and the UK investors rose marginally. Across bullion worlds, global use base are a base of more than 99,000 customers. The number of gold buyers slipped 13.9% from September, while the number of sellers rose by 12.7%. The Gold Investor Index, so together that took the Gold Investor Index, unique measure of revealed preference among the largest single pool of private bullion owners worldwide, down from 54.7 to 53.4, just below January 2020's pre-COVID low to its lowest reading since July 2019. The Investor Index, so new all-time highs in the stock market are also leaving gold investors in the shed. As to the supply chain pressures driving energy and other commodity prices higher. None of the None of these undermines gold's value as a portfolio hedge. On the contrary, gold's strongest returns tend to come when equities suffer long-term losses, and investors choosing to buy gold from today are doing so when the market is quiet and other assets are looking increasingly overextended. A reading of 50.0 would signal an exact balance between the number of people starting or adding to their personal gold holdings with those who reduced or sold out entirely. The gold investor index hit a decade low of 49.1 in June 2019 as price rose sharply, followed by a decade high of 65.9 in March 2020 when the COVID crisis first hit. With the number of gold buyers continuing to beat the number of sellers last month, gold demand was positive by weight in October, more than reversing the previous month's liquidation with the net purchases totaling 123 kilograms. September has seen bullion vault users as a group sell gold for the first time since January 2020, eve of the global COVID crisis, with the net sales of 87 kg. Last month close took the total quantity of gold owned by and insured by for bullion vault users, all held in each client's choice of New York. All held in each client's choice of New York. London, Singapore, Toronto, and most popular Zurich reach a new month-end record of above 47.7 tons, now worth $2.7 billion. सो आ जाते हैं MT4 टर्मिनल पे एक बार वापस से और देखते हैं गोल्ड का मूव. सो 58.3637 के लेवल्स. देख सकते हैं करेक्शन के साथ 1756 के लेवल आते हुए थोड़े से और करेक्शन देखने को मिलेंगे, हमारी पोजीशन अच्छे प्रॉफिट में आती हुई देखने को मिलेगी। 1756.2324 के लेवल्स पे मूवमेंट दिखाते हुए। मार्केट थोड़ी सी करेक्शन के आने के बाद वापस 1857 के लेवल्स पे, और हम रहते हैं अपने डिस्कशन पॉइंट पे, तो हम लोग डिस्कस कर रहे हैं गोल्ड नेडेनिया डॉट कॉम। तो गोल्ड नेडेनिया डॉट कॉम पे गोल्ड के प्राइजेस 1861.19। एटीन फिफ्टी सेवन के लेवल्स पे 1857.2847 के लेवल्स बनते हुए प्राइजेस। टेक्निकली देख ले तो प्राइजेस एक बिग ग्रीन कैंडल बनाते हुए देखने को मिले। ऑल्दो प्राइजेस जो थे एक बार हम लोग को न्यूज़ नेगेटिव होती हुई दिख रही थी, लेकिन प्राइजेस अपसाइड मूव करते हुए दिखे और पूरी तरीके से तेजी बनाते हुए। सो ऑल ओवर मार्केट के मूव की बात करें, US 30 हमारा पॉजिटिव। सो US 30 हमारा नेगेटिव रहा, बिटकॉइन पॉजिटिव, शंघाई एसी नेगेटिव, UK 100 पॉजिटिव, टैक्स 30 पॉजिटिव, निकाई 225 पॉजिटिव, निफ्टी 50 आज हमारा नेगेटिव क्लोज होते हुए दिखा है। ASX 200 नेगेटिव, FRA 40 पॉजिटिव, IC नेशनल 100 पॉजिटिव, WTI क्रूड नेगेटिव, UK ऑयल नेगेटिव, US डॉलर इंडेक्स पॉजिटिव और इसके साथ साथ गोल्ड भी पॉजिटिव। सिल्वर और पैलेडियम सब पॉजिटिव होते हुए दिख रहे हैं। So gold surged to multi-month high above 1860 on a US inflation report. So gold surged to multi-month highs above 1860 on US inflation report. Gold shot higher in the early American session and reached its strongest level since June above 1860. The precious metal seems to So gold shot higher in the early American session. Gold shot higher in the early American session and reached its strongest level since June above 1860. The precious metal seems to be attracting investors as an inflation hedge after the US data showed that the annual CPI rose above 6% in October. The technical confluence detector showed that the retreat in gold prices is likely to meet a strong demand around 1890, which is the intersection of previous day's low and the previous week's high. The next downside target is envisioned at the pivot point 1 month R1 at that is resistance first at 1816. Further south, the previous month's high of $18.14 will come to the rescue of gold's bullish traders. The confluence of Fibonacci 161.8% 1 day and pivot point 1 day as 3 that is support 3 at 1809 will be the line in the stand for gold optimist. Alternatively, a revival in the buying interest could see a retest of powerful resistance around $18.28, where the Fibonacci 38.2% 1 day, Bollinger Band 1 day upper, and SMA 5, that is simple moving average 5 4-hour coincide. Up next, the previous day's high at 1833 could be put to test once again, above which doors will open up towards 1830. So at that point, the pivot point 1 week R1 converges with the pivot point 1 day R1. मूविंग टुवर्ड्स फंडामेंटल ओवरव्यू बट उसके पहले एक बार अपने MT4 टर्मिनल पे आ जाते हैं तो देख सकते हैं गोल्ड के प्राइस 1854.2550 और हम लोग अपनी पोजीशन यहाँ से बुक कर लेते हैं। हम लोगों ने अपनी पोजीशन बुक कर ली है। गोल्ड का प्राइस देखेंगे थोड़ी देर 1854 के लेवल्स। एटीन 51.6770 के लेवल्स हम लोगों ने जल्दी कर दी प्रॉफिट बुकिंग में। लगातार मार्केट एक बार और करेक्शन के साथ 1868 के लेवल्स बनाने के बाद 51 तक के लेवल्स बनाते हुए 1852 1853 के लेवल्स वापस से थोड़े से अपसाइड सर्च करते हुए मार्केट। Okay, so moving towards the fundamental overviews. So gold price has entered a phase of upside consolidation after hitting a wall of resistance at the critical 1834 level. The dynamic in the treasury yields and the US dollar continues to play out with both rebounding ahead of all important US inflation data. Although the Fed rate hike outlook likely hints the strength of the US labor market, the inflation figures could play a part in the gauging the timeline of Fed rate increase. एवरेज फोरकास्टिंग देखते हैं सो 1 वीक की 1798 बायस इज बुलिश फॉर 1 मंथ इट इज 1805 एंड फॉर 1 क्वार्टर इट इज 1834. Moving towards this Powell's conference meeting. So conference or diversify and inclusion of economics, finance and central banking. We will explore this.
Direct and indirect. So the direct effect relates to the capital gains that accrue to the holders of securities because of our purchases. And these benefits tend to be highly concentrated. So the right-hand chart shows that in the euro area, less than 1% of households in the bottom net wealth quintile hold bonds, mutual funds, and stocks, while a significant share in the top decile hold such assets. Hence, central banks purchasing longer dated assets disproportionately benefit wealthier households. The indirect effects relate to the portfolio rebalancing triggered by the compression of risk-free interest rates. Faced with low and falling yields, many institutional investors have purchased residential and commercial real estate even well before the pandemic. Next slide, please. So the left chart on this slide shows that, for example, in the Netherlands, real estate investment trusts owned assets worth almost 10% of the country's GDP in 2018. And research by the IMF has found that such investors are likely to have played a role in pushing up global real estate prices in recent years. As a result, house prices are increasingly behaving like globally traded financial assets, and therefore they risk diverging from national income developments. And this is shown on the right-hand chart. There you can see that in the euro area, residential property prices have risen by 35% since 2015, and this is much faster than disposable income. So my final slide, please. And new ECB research corroborates these findings. It suggests that unconventional monetary policy measures, such as asset purchases, are likely to have a significantly larger impact on house prices than changes in short-term policy rates. And in countries where home ownership rates have traditionally been high, such as Spain and Italy, house price increases generally benefit a large share of the population. But in other countries like Germany and Austria, where less than half of the population own their main residence, the recent sharp increase in house prices could heighten inequality. And this was actually a concern raised frequently at our ECB Listens events. So the question is, what does this now imply for our monetary policy? So first, central bank must pay more attention to house prices. As part of our monetary policy strategy review, we recommended a roadmap for the inclusion of owner-occupied housing in our inflation index. The right-hand chart shows that the inclusion of owner-occupied housing costs would have led to persistently higher inflation since around 2014. In the second quarter of this year, owner-occupied housing would have contributed between 0.4 and 0.5 percentage points to a new augmented inflation index. The second implication is that as part of our proportionality assessment, we need to choose and calibrate our policy instruments in a way that secures the achievement of our mandate while minimizing negative side effects. And at the current juncture, it is likely that the large stock of acquired assets, in conjunction with our strong forward guidance on policy rates, will prevent an unwarranted tightening of long-term rates once net asset purchases have been terminated. From today's perspective, this can be expected to happen in March 2022 in the case of net asset purchases under the PEP, while the pace and duration of our net asset purchases under our regular asset purchase program will, of course, depend on a thorough reassessment of the medium-term inflation outlook. By gradually shifting the policy mix away from net asset purchases, we can prevent the distributional footprint of our measures from increasing and at the same time mitigate financial stability risks. And by ending net asset purchases before raising policy rates, we signal that we are not willingly accepting losses on our balance sheet that would ultimately lead to losses to the average taxpayer. Our forward guidance ensures that we will not respond hastily to rising inflation rates. We recognize that current high inflation has a particularly concerning effect on the incomes of households at the lower end of the income distribution. However, monetary policy cannot mitigate short-term spikes in inflation, and our efforts are therefore focused on assessing how persistent current price pressures will ultimately be. And at our last policy meeting, we therefore concluded that there are good reasons to believe that euro area inflation will decline visibly over the course of next year and will gradually fall back below our target of 2% in the medium term, meaning that the conditions for raising interest rates, as set out in our revised forward guidance, are very unlikely to be met next year. Prematurely raising policy rates in response to a temporary inflation surge would hurt households with low incomes the most, as it would harm their employment opportunities. Nonetheless, significant uncertainty remains as to how persistent some of the current price pressures will prove to be. And therefore, of course, we continue to carefully monitor inflationary developments in the euro area. Thank you.
Thanks a lot, Isabel. And now we hear from Lenny Liang.
Hi. Thank you, Gita, for organizing it. Thank you to the conference organizers for inviting me today. So on this topic, I want to start with the good news that macro policymakers are now recognizing the potential implications that wealth, income, and social inequality can have on economic growth and welfare. Also, I'm going to offer a perspective from Treasury, maybe a fiscal and political perspectives. Though I'm a novice at this, I've spent many more years at the central bank as more of a technocrat than from the Treasury. Supporting a more equitable and socially inclusive recovery from the pandemic has been a core priority of this administration and the Treasury Department. We know the economic impact of the pandemic fell most severely on lower income communities and households, which were disproportionately often in the frontline service jobs. But it's also a longer term priority. President Biden issued an executive order on the first day to advance social equity, to try to close gaps in wages, housing, and lending opportunities, and in access to higher education. It cited estimates that closing such gaps could add $5 trillion to GDP in 5 years. So that is not a trivial amount, it is substantial. On the view of whether monetary policy should consider social inequalities, My views are broadly consistent with the generally the economics profession. Something that Geeta represented earlier. Monetary policy is a blunt tool aimed first and foremost at price stability. In the U.S., maximum employment is added, so there's already a dual mandate. In general, that hasn't caused conflicts, but already the Fed is tasked with achieving two objectives with basically one tool. That's not to say that monetary policymakers can ignore the economic impacts of monetary policy on inequality. First, we shouldn't lose sight of the fact that price stability, its core mandate, is actually part of the social contract. Inflation is very regressive. I think that's first and foremost. Second, central banks certainly have the responsibility to consider the effects of their policies on inequality. Central banks have a very valuable franchise as the producers of high quality data, information, analysis, and I think they have a responsibility to improve the public discourse in this area. There is the additional question of whether monetary policy leads to greater inequality. My reading of the research is that this link is indirect, a bit tenuous. Of course, asset prices raise, low rates increase asset prices, but for all the other reasons, the channels that Geeta represented, generally the net effect on inequality is hard to determine. But there is a potential link. Preemptive policies to reduce inflation work by slowing aggregate demand. That's how monetary policy works. And it's documented that some of these communities and individuals are going to be more vulnerable to slowdowns and to recessions. Isabel's charts were exactly that. And they are the first to lose jobs when growth slows. They are the last to be rehired, and they may have greater difficulty in accessing credit in downturns. And if these patterns are systematic, it seems they could, over long periods of time, reduce the accumulation of wealth and human capital of the most vulnerable. And so these effects could be there. They may be hard to find in the aggregate data, either because they're indirect, they take a long time, they're difficult to identify. But I do think it's very important for central banks to be developing a better understanding of these issues and to be sharing that with the public and improving the public discourse. That said, it's still a separate issue if monetary policy is the most appropriate and effective tool. And I think here there are very strong parallels to financial stability issues. It is clear, at least to me, that monetary policy directly affects financial stability. It affects the probability of a crisis through financial conditions and credit growth. And loose conditions coupled with rapid credit growth, we know, are a pretty good indicator of a financial crisis. And they can increase risk to growth, downside risk to growth. Yet even in that situation, unless price stability is jeopardized, policymakers' first option is probably not monetary policy. Rather, a more effective approach would be financial macroprudential policies targeted directly to reducing the probability of a crisis and its conditional impact. I think the parallels to social inequality here are strong. More promising, I think, then are, instead of monetary policy, are some macroprudential policies, because they, in terms of thinking about social inequality, policies like LTVs, et cetera, I hope to say, I'll stop here and hope to say a little bit more later about some of the distributional effects of those kinds of policies. So thank you.
Thanks, Nellie. And now we hear from Roger Ferguson. Roger, I think you're muted.
Thank you. I thought I'd unmuted myself after 24 months of doing this. One might have imagined that be naturally looking there. Anyway, thank you very much. A pleasure to be on this panel, and a pleasure to see our friends and colleagues of long-standing, very, very important discussion. So let me build on what has been said by emphasizing a few things and then maybe talking about recent experiences here in the United States. So let me emphasize the points that Isabel and Nellie have talked about, which is the research has shown, and I agree with it completely, a number of points. One is we need to start with the fact that the fundamental mandate for all central banks and the use of monetary policy is around price stability. And Isabel started at a very important point, which is that inflation is perhaps one of the most regressive taxes in almost all of our societies. I recall when I was joining the Fed now 1997, testifying to this point, and particularly speaking to other African Americans as to why it was very important to have a central bank that was vigilant around inflation. And so we need to continue to communicate that message. Having said that, we go forward to the next points, and I think Isabel put her finger on it, as did Nellie, which is when we get into recession, the individuals who are most likely harmed tend to be those at the lower wage scales. And similarly, when you think about the transmission mechanisms, as have been discussed, asset prices tend to be disproportionately, by definition, beneficial to those who are wealthy because they obviously control more assets. Here in the U.S., it also turns out that wealthier individuals and our white citizens have a much larger portion of home ownership than do African Americans and Hispanics. And so we know there are potential social impacts of the kinds of distribution mechanisms or transmission mechanisms that we've talked about. So that's some of the basic facts, simply reinforcing what you've heard already. Having said that, we've also had some recent experience in the U.S. over the last 10 years or so that shows that a central bank with a dual mandate, if it is confronting a situation where inflation is relatively flat, and the Felix curve, as you know, is relatively flat, allows that central bank to, quote, run the economy hot in order to increase labor force participation, bring in marginal workers who often tend to be, at least in the United States, minority and women workers who tend to have lower salary. And so while we do not think of inequality or social dynamics as being the primary focus of monetary policy, I do not think that it should be. We've had a recent experience here in the U.S. until this crisis that has shown in a situation in which you have a dual mandate and inflation is well contained, a central bank under a bold leader, such as we've had with Janet Yellen and Jay Powell, can run an experiment that results in perhaps increasing the possibilities of leveling out some of these inequalities. And so we should leave that as at least a real world experiment that does not suggest that we should change the way we think about monetary policy, but nor should we say that monetary policy has no effect on current and future prospects for income and wealth inequality. The second point I'd make is we have now another experiment which shows the other side of this, and again works through the question of picking up the economy in a way that brings jobs back equitably across society. So here in the U.S., we're struggling with a relatively low labor force participation rate, but that is very uneven. So the labor force participation rate for minority males has dropped quite significantly. That for women has also been very, very low. So the most recent measure for labor force participation rate for women remains stuck at around 57%, which is the lowest level in over 30 years versus about 70% for men. And the labor force participation rate for African American men is 4 points lower than white men, at about 66% versus 70%. And why is that important? For reasons that all of you understand, which is individuals being out of the labor force are likely to lose the skills that are necessary to compete effectively for jobs going forward. This is particularly challenging when you come to the income inequality question, because it is still recognized here in the U.S. at least that women earn somewhere around 79 to 80 cents for every dollar that the male workers earn. And for African American males, it's not much better versus white males. So that clearly suggests that we have a challenge here of both getting the economy going again, but also determining, the central bank will have to determine whether I can once again run the experiment of attempting to run the economy a little hotter than one might have imagined in a period when inflation might be picking up. So I think there is a bit of a challenge and a dilemma for the central banks, at least in the U.S., going forward. Let me broaden my comments by saying two other things very quickly. We're talking about monetary policy, but obviously central banks play other roles, at least here in the U.S. and other places. Nellie put her finger on some of those. In the United States, the central bank is also responsible for some elements of bank supervision and regulation, which I think should be done with an eye towards thinking about equitable distribution of financial capabilities. And I know that other societies, having spent some time talking to the individuals and
1854-55 के लेवल्स बनाते हुए फिलहाल लगातार 2 रेड कैंडल्स के बाद एक ग्रीन कैंडल फॉर्म होती हुई, और जहां तक उम्मीद है अब यहीं पे कंसोलिडेशन के साथ 1854-55 या फिर 1850 टू 55 की रेंज में क्लोजिंग देखने को मिलेगी। डिपेंड ये करता है कल का मूव, तो जैसे मैंने एटीआर से बताया कि कल ज़्यादा वेरिएशन नहीं देखने को मिलने वाला मार्केट में। तो दूसरी कैंडल बनती हुई 1853.8889 के लेवल्स। 1853-54 के लेवल्स बनते हुए हम लोग आ जाते हैं अपने डिस्कशन पॉइंट पे. So we are discussing goldnewsreaders.com. So precious price surge in October. Gold reserves course after inflation data. Gold price reverse course to trade up nearly 1% on Wednesday after data showing US consumer price increased more than expiry expected in October, bolstered the metal's appeal as a hedge against inflation. Spot gold was up 0.8% to $1846.51 per ounce at 8:54 a.m. ET. Although the metal initially fell, US gold futures rose 1.1% to $1851.40. Once again, we have hot inflationary data, said David Merger. So once again, we have hot inflationary data, said David Major, director of metal trading at High Rise Futures, with gold being the quintessential hedge against inflation. We have believed inflation is the underlying positive environment that will foster the gold market rally in this week's and monthly end. So this environment is a double-edged sword because as the inflationary data continues to come out hotter than expected, the concerns will be whether the Federal Reserve reduced liquidity faster than anticipated, which led to the knee-jerk move to the downside. This environment is a double-edged sword because as the inflationary data continues to come out hotter than expected, the concern will be whether the Federal Reserve reduced liquidity faster than expected, which led to the knee-jerk move to downside. US consumer price increased more than expected in October as the cost of gasoline and food surged, leading to the biggest annual gain since 1990. Price of bullion have hovered around 2-month highs over the past few sessions after assurance from key central banks last week that interest rate would remain low for the time being, with the Federal Reserve sticking to its view that inflation is transitory. The precious metal benefits from low rates as they reduce the opportunity cost of holding gold, which is no interest. There appears to be a growing perception in the markets that for all warnings around rate hikes, central banks are not as keen to follow through, said Crane Alam, senior market analyst at Onada. Elsewhere, spot silver rose 1% to $24.51 per ounce. Platinum jumped 1.7% to $1,076.7464 and palladium gained 1.1% at $2043.56. आ जाते हैं MT4 टर्मिनल पे वापस. तीन मिनट बाद इस कैंडल की क्लोजिंग का टाइम देखते हैं नेक्स्ट कैंडल की डायरेक्शन। फिलहाल हम लोगों ने सारी पोजीशंस क्लियर कर ली है। होल्डिंग पे हमारी कोई भी पोजीशन नहीं कल के लिए। एटीन 57.3734 के लेवल्स बनते हुए। एक मिनट का वेट करेंगे। एक मिनट बाद हमारी दूसरी कैंडल फॉर्मेशन का टाइम 1858 तक के प्राइसेस अभी मूव करते हुए। ओके, एक दूसरी कैंडल फॉर्मेशन 1858.2023 के लेवल्स पे अपसाइड सर्च करते हुए। ओके 1858 से वापस से 56 तक के लेवल्स। सो हमने आज बहुत सारी चीज़ें डिस्कस कर ली हैं, सच एज हम लोगों ने ट्रेड एग्जीक्यूट की जिसमें कि हम लोगों ने काफ़ी अच्छे प्रॉफिट्स भी जनरेट किए हैं, 186 टू 70 और $702 के प्रॉफिट। एंड इसके साथ हम लोगों ने अपनी न्यूज़ भी एनालाइज की, कुछ डिस्कशन पॉइंट सामने रखे। सो हमारी साइड से आज के लिए इतना ही। अगर आप लोग के साइड से कोई भी क्वेरी हो, यू कैन जस्ट मेंशन इन द चैट बॉक्स सो दैट वी कैन डिस्कस अबाउट इट। और कोई भी प्रॉब्लम फेस करो, यू कैन मेंशन इन द chat box. Chat box is open for you all. सो आई होप आप लोग की साइड से सब कुछ क्लियर होगा. काइंडली प्रेस 100 अगर आप लोग आज का सेशन यहीं पे एंड करना चाहते हैं. ओके, सो हम लोग आज का सेशन यहीं पे एंड करें. थैंक यू सो मच फॉर जॉइनिंग एंड कंसंट्रेटिंग. कल मिलते हैं वापस से अपने सेशन में, डिस्कस करेंगे बहुत सारी चीजें. सो थैंक यू सो मच फॉर जॉइनिंग एंड thank you so much for your precious time. I am ending this session right here, right now.